love the channel and find it useful in becoming a happy retiree. Subscribe today. You go right to Tammy, who joins us on the line from Atlanta. Hey, Tammy, what's going on? How can I help?
Hey, good morning. I'm 58.5. I've got the Fidelity Index 2025.
Did you just say I'm sorry, Tammy, did you say you're 58 and a half?
Yeah.
Got it. Okay.
And so my main IRA, my main money account is with a Fidelity Index Fund, Target Date Fund 2025. So someone said yesterday, well, it looks like it's about 30% international. Fidelity guy said that. And then he thought maybe that was too much. And then, anyway, I'm just trying to figure out and then the Merrill Lynch guy said, don't make any changes right now. You don't want to jump out at the bottom. And he didn't think we're into a recession, like you said. So anyway, and then they always want to know if I want them to manage my money.
Well, now, wait. You just mentioned there's so many things that you just mentioned that I have questions about. You just mentioned your Fidelity folks. You mentioned a Merrill Lynch person. I'm going to go back to the beginning of the call when you told me you're 58 and a half. Are you just trying to make sure we know exactly how old you are, Tammy? Usually you're not trying to add even half years onto your age. So, but you're getting specific.
I guess I'm saying I do want to preserve this money.
Yeah.
I don't want to lose it all. So it's my main account, and I've always gone to a target date fund. So
okay, so I'm looking at this Fidelity. It sounds like the Fidelity Freedom Fund. Fidelity Freedom Funds are their target date funds. This one is the 2025 has, to your point, it's about 25% in international stocks, Tammy, and it's another 37% in U.S. So where is it away from stocks? 26%, 27 bond, another 11 cash. So let's call that 38, almost 40% in cash and bonds. The other 60 in U.S. and international. So you're getting close to that retirement age. Well, actually, let me ask you that. So you're 58 and a half. When do you think you're going to be in actual retirement? And the reason I ask that question is, when do you think you're going to start using this money for income or start utilizing it?
I was wanting to start using some of this money, and when I turn 59 and a half, maybe $1,000 a month or something, maybe. I was hoping to maybe start taking some of it out.
Are you still working, or are you still saving?
Yeah, so maybe at least 5 more years, maybe realistically working. And I will have a pension coming and Social Security.
Got it. Well, I look at the way that this so any of these target date funds, whether you're using a Vanguard target date fund or T. Rowe Price target date fund or Fidelity target date fund, they all have the similar concept where they give you an automatic balance, Tammy, and then as you get older, that balance shifts. So they are rebalancing it for you, so it gets a little bit more conservative as you get to retirement age. So this thing will get more conservative as you go. Yeah. So I think there's a lot of advantages to these target date funds. They give you the asset allocation, which is the spreading out of U.S. international stocks, bonds, other areas, cash. Those are all the different asset classes. That's a good thing. The next part of this is it rebalances and it gets more conservative, so you're not stuck in 90% in stocks when you're 62 and now you need the money and the market takes a 20-30% dive. We go into recession and all of a sudden you've damaged your retirement assets to a point where now your income from that, it's going to be a lot lower because it's such a dramatically lower value. So this is a good thing to have this type of strategy in place as you get into retirement. And again, one of the biggest mistakes retirees will make is they stay too aggressive too long and their portfolios get hit right before they need to use the money. So I actually like the fact that you're using this. It's a really good way to do it. I would say the only issue with these is that they are very much, Tammy, and this is not just the fund you're using, but any target date fund, they are very just formulaic. And you don't really know what's happening inside the fund. And sometimes that's okay, as long as you know the fundamental principles that each retirement target date fund use. So what Fidelity's philosophy is, and T. Rowe Price and Vanguard. So you've got to be comfortable with how they're doing it inside of the fund. And sometimes I think it's particularly as you're headed into retirement, it's a little tough to have everything just on a set it and forget it basis where you have really no access. You can't really, there's no commentary around it. You don't know what the manager's doing, why they're doing it. So sometimes it does help to have an advisor to help you through this and really understand what you own. Some people don't need that. There are a lot of investors, and the way the math works on this is about 25 to 30% of investors in America, they don't need any commentary. They don't care. They can just stick money in a few Vanguard funds or a target date fund and let it ride, and they're totally comfortable with that. A lot of us out there want to have some sort of interaction, and maybe that's why you have your Merrill Lynch group. Maybe that's why you have your Fidelity group, so that you can have a conversation and have some sort of customized plan that's specific to you. And it's going to cost you a little bit, Tammy, right? If you're in a program with Fidelity, you may have to pay them some sort of percentage a year. If you're with Merrill Lynch, I guarantee you, you're going to pay something in order for them to give you advice. And sometimes it's very much worth it, especially as you go through these periods of time and you get freaked out. Some investors get freaked out in these periods and they make big mistakes. To your point, hey, it's not the time to sell out everything because we think that we're not having a recession. If we don't have a recession, that means we probably don't go down by 25 or 30%. But you've got to make that call, Tammy. I would just tell you to kind of wrap this up that you're in a good to very good spot. The fact that you're already balanced in a retirement target date fund. Done. To take that one step further, to get a little bit more customization around that, is when that would be the next step for you with your Fidelity group, maybe the Merrill group. And for some individuals, it's very much worth it to get some guidance and pay a little bit per year in order to do that. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.